Good morning, everyone. How's everybody doing? Anybody in the room on the stream? Folks in the room on the stream, let me know. Hey, Howard, how are you? You can use the chat in Discord, Howard. Thanks for joining us. Good stuff. Now, this is our first time doing this. I hope you can all see my screen and let me know if you can't. Hey, Raj. Hope the sound quality's okay. All good? Okay. If you guys are having trouble with this, we could always put up a Zoom link for the folks in the room. All right, so let's get to it this morning. And welcome to everybody who's joining us on YouTube Live right now. I'm JJ, and what we attempt to do every morning at this time is prepare the folks in our trading room. We look at how the market closed on Friday. We look at the overnight inventory, and then we set levels for the day, which are based on cost basis. So first thing we do is, we can take either, we always like to start, look at a candle chart, and overall you can see we're underneath that 200 moving day average, and we are under 5780 right now. So we have, if you looked at all the inventory from basically September, is all above 5780, which means that time and volume have traded above 5780, trapping people long. Now, we know this is a futures contract and it's speculative. So the nature of speculation is to not buy and hold forever, right? So this is a trading market. We can expect liquidation, and we have seen it. We've seen it every day over the last couple of days. Last week, we've had, you know, decent liquidation. Not everybody who's trapped long sells at the same time. So, of course, we are going to be looking for and monitoring for price stability. What does that mean? That means that price stability is created by number one, shorts coming in and covering, then wholesale longs building a position on top, and then retail coming in on top. That'll create a sort of a balance or a back and forth like you see here, right? Or you see here. And then a move to go and get rid of that inventory. So some levels to watch for today. Up the upside are 5780, downside 5692 and a quarter. That's on what I call the candle wax. On the old TPO chart, I'm looking at 5724. You can see that the cost basis, market profile traders call this the value area. I simplify it a little bit by calling it a cost basis. It's where your inventory is priced. You can see that most of the cost basis is above 5724. Okay. And we are in this kind of ugly brown colored zone from 59.50 to 56.20. And this is the doubling of this zone here from 59.50 to 61.15. Folks in the room are familiar with this, right? Um, could somebody give Lohit the proper link? We're not on Zoom right now. Here, let me just, sorry for the teething problems. Anyway, so what we're looking for is the market to stabilize. Okay. And the overnight inventory right now is 100% short. Now, what does that mean? It means that all the volume and time have been spent underneath the previous day's close. Friday, we had a move up at the end of the day, which is very common in these markets. You get a liquidation, you get traders coming in, short covering, wholesale position, retail, then up and sell into the close. So the Globex or overnight session allows those people who got caught short underneath 57.24 to average up and then kind of come in and cover and close off some of their risk. Okay. So overnight inventory is 100% short. It is a brand new week, so we have really no idea what to expect. So the way we do this now, we go into a more detailed TPO chart, right? And luckily for us, TPO is very hard to trade. So what we do is I will come up with a balance zone. Now, what I did last night was I came up with a balance zone between 57.69 and 77 and a quarter. Now, we gapped down on the open from the close. We're still inside Friday's range, but we did gap down. So what I'll do is I'll draw the discount zone. So it's 2 times, 4 times, and 8 times. And we are in the 4 times discount zone to Friday's close. Now you're asking, what the hell is JJ talking about? It's just all inventory. So inventory is either sold for profit or it's either sold at a discount. Now there's a method to this madness. The reason I do this is because our trades are based on this. Okay. Our trades are based on when the market goes from one zone to another. So I'm just going to mark VWAP off, right? And then I'm going to get rid of it. So it's kind of clouding up VWAP, and all those standard deviations are sort of clogging up the chart. So as we walk through the chart, we've got VWAP here under, 38, 39. Let's look at the price action here. You're not seeing the candle chart. Okay. Huh. Why are we not seeing the candle chart? Okay. I'll have to figure this out. Strange, you're right. Okay. Let me, you're seeing the TPO. I don't know why you're not seeing the candle. Sorry, guys. One sec. I'll post it. And what I can do, let me just stop the share and then start the share again. See if that helps. Okay, so it's brought up the candle chart. Yeah. So there's the candle. And folks who are joining us, please be patient. Let me see. Eureka. Now I'm cooking with gas. Old guy learns new tech. Man, if you told me on the trade desk that one day I'd be like sharing my screen, dear God, with a bunch of people I don't know. But you can see it now, right? Right? Okay. Let's see what's going to happen now. London's going to open in 20 minutes. And of course, the time change screws everybody up. Now all I got to figure out is how to do drawing tools with YouTube, and I'm pretty much set to go. So once again, folks who are joining us, this is a rough run through. So once we set up these balance zones, the trades that we love to take are what we call the look below and fail. When the market looks below one of the colored zones into the other and then re-enters. Now, the business reason for that trade is because the selling orders complete. Anyone who's ever worked in the business or on a trade desk knows that sell orders are not infinite, which means they don't just keep coming and coming and coming unless you have some sort of a news event or a market shock, right? But eventually, what will happen is those sell orders will finish. And then once buyers come into the market, right? So, say people were short up at 46, they'll come in and start covering. So, when they start to cover, wholesale will build a position on top of that. Retail will come in and price will rotate higher. This is the concept of rotation, right? And we don't mean rotating from one sector to another. We talk about rotating inventory. Remember, it is the futures market, right? Stock market, futures market, currency market. It's a market. You come in, we sell you something, you go away. You come back, we sell you some more stuff, you go away. That's how it works. So when the selling has finished, that sell order that takes us down underneath 57.24 has finished, our trade is to get long. We get long because we understand that supply has run out under 24 and three quarters. So, of course, we're not going to buy the lows. We'll try and buy 25, 26, 27, 28, and then we'll sell a little bit at 32 and a quarter. And then our next target would be 39 and three quarters. But of course, you can see that there's a seller before 39. So once that seller engages and shows us that the market is not going to get to that level, the way we trade is if we go long 5 contracts, say at 26, we'll sell 3 in the middle here at 30 at 32 quarter, and then the other 3 here at 34, 35, right? And we'll put our orders out in the system so when the market goes up, it takes us out so we don't have to work as hard, right? The concept of balance is that we rotate to the top. The other trades that we like to take are the look above and fail, which is a short. The short is based on seller competition. Now, where a lot of people get into trouble is they try and short the front end of this move and they get stopped out. What we do is we wait till the market looks above 57.54 and three quarters and then sells underneath it. When you see that the offer comes under 57.54 and three quarters and it can't offer any higher because the sellers are competing, then we can take a short. We have a place to put our stop, right? Say at 55, 56, right? Because if the market breaks over 55, 56, the business reason for our trade, which is that sellers are competing, has gone away. Once the business reason for your trade goes away, there's no sense in you being in the trade as a retail trader. You don't have unlimited capital. That's why you have a stop, right? Once the business reason for your trade goes away, so do you and your capital. So if the business reason still holds and the market's offering lower, if we're short, say 53, 53 quarter, as the market comes in, we'll put some buy orders down here and I'd look at 50 as my first buy, 50, 50 quarter, cover a little bit. It moves up. It's still, the offer is still, you're getting lower highs so you can stay short down till the next target at 47 quarter, which is a nice little trade, 53 to 47 on a couple of contracts. We trade here to really make an income. This trading room's not about glory. Um, we find consistency and income is the best way for retail traders to approach this business and think of it as a small business. So now what we're going to do is let us see. Now, here's another thing. The great thing about this method is it keeps you out of bad trades. Okay. So if you only practice the look below and fail, the look above and fail, you will see that there's not that many opportunities. So that keeps you out of this choppy mess that you're seeing here, right? All of this choppy mess right here, right? You don't want to trade that, right? This is where traders go long, get stopped out, go short, get stopped out, go long, get stopped out, go short, get stopped out. It keeps you from doing that because you only trade at the edges of your profit or discount zones, right? Where it makes the best business sense. And I would say 100% of retail traders, when they first start, have no clue when not to trade. If you learned when not to trade, you will limit your losses probably by 60 to 70%. I don't have the numbers, but I think it would be easily that. Okay. Everybody have a good weekend? Is Discord working? Okay. Just checking. Okay, question from YouTube. Where did I get the first cost basis from today? Way up here. It's 57.69 and three quarters to 77 quarter. Now, it's a good question because you know what? What if you had just come in, right? And you didn't use the cost basis I use. How do you find that? Well, what you do is you go and you look for an area where the market does this sort of consolidation. This is a distribution cost basis because it's above VWAP. You could use this or you could use this. Either way, it's going to work really, really nicely. So what you do is you look for a high and a low. And when you go back to that high, you'll come back to the low. Hang on. Let me just show you guys. It'll freak you out. So let's say you use that as your cost basis, right? Say you use 44 to 52, 44 half to 52 half, or 52 quarter, right? And what you're doing is you're looking for the high, for lows and highs. And when you break above that high, you go right back to that low. When you can't take out that low, you go right back to that high. That's two-sided trade. Then you double it to the upside, double it to the downside. You will be surprised what a simple way that is to get your bearings in a market, because that's the other thing. Most retail traders have no idea what the hell's going on in the market. That's why they're having trouble trading, because there's no situational awareness, there's no directional awareness. If you understand that, this is just a market, this is just a sales chart, right? So a sales chart shows you where your product is accumulated, paid for, and then distributed for profit or put on sale, right, at a discount. This way you have situational awareness, because say you extended that out and then you just doubled it to the bottom, right? You'll give you really nice targets because that's a cost basis that you can work off of, right? It's really simple. It's really, really simple. And the reason that I clung to this is because when I first started trading, somebody gave me a book on candles, and it was like thicker than the Bible. And there's no way I can remember this while I'm getting punched in the face by the market. I can't remember all this stuff. So how do you make trading practical? Because people have been trading for thousands of years, right? How did they trade before the computer chip? How did they trade before screens? Well, when I was getting into the business, they were just closing the floors, and those guys, you know what their technical analysis was? A piece of paper and a pencil. And it wasn't even a full size pencil, it was like a golf pencil. So, how did they trade without looking at a chart all day? Well, you'd know that there was a seller at a certain level, and you knew that that seller would be exhausted at another level, right? So, if somebody starts selling at 57.50 heavy, you sell next to them, right? You short. When they stop selling, you cover. Sounds a little too simple, right? So it's spring in BC, Travis? That's good. Yeah, it was nice and warm in Liverpool the weekend too. It was like 20 degrees. Uh, so now we're watching. I always notice that, when we do the time change in the US, not only the people, but the markets are a little loopy. They're just trying to figure out what to do here, right? Also, we've had selling, constant selling for all last week. I think the buyers are getting a little worn out, right? So the US markets open at 6 p.m. Eastern New York time in what we call the overnight or the Globex electronic session, right? They go till 9:30 in the morning where what we call the RTH or regular trading hours starts, right? So daylight savings goes and screws all that up because you spring forward an hour, right? So you got to change. Like yesterday, I was like, it's a good thing I was up late because I went and I forgot, oh my God, I got to change all my time settings in Sierra, right? So for all of you who use Sierra chart, you have to go into each chart settings window and change the times. Bit of a pain, but hey, beats digging ditches. So now a lot of the people joining us, people in the room know that for us, there is no trade here. This way, we don't waste money. And the wonderful thing about knowing when not to trade is that it immediately puts your mind at ease. When your mind is at ease, you can actually see things. When you're always hunting and searching for your trade, you're like a dog chasing its tail, right? When you see this kind of chop, you see that the market is not trading any kind of quick speed. Sometimes you can also, what we like to do is you open up a time and sales, right? You can notice I'm not even on, like I'm on sim on this one. My other trading software is open. Like I run a couple of instances of Sierra, but I have no interest in taking a trade until my setup shows up. Look how slow the time and sales is moving, right? So the time and sales to me is like a speedometer. When it's moving really slow, when it's stop and start, then I can manage my expectations and I know, if I do get into a trade, I might have to sit in it for a while, right? If I get into a trade and it's not where I normally do business, where my setup is, right? What's the probability of me doing business well if I'm outside my business parameters? Probably not good, right? When you think about it and you think about trading as a business, because it is, right? A lot of people like to think it's, you know, probabilities and things like that. Well, Let me tell you something. From someone who's done nothing but sell stock for insiders for 30 years, um, we don't care about probabilities. We care about selling and finding somebody to buy it. It's all about distribution. The market is a distribution mechanism. So smart money can offload their early stage investments into the retail flow for profit. What you guys do with it afterwards, we don't really care. Now, of course, a huge business in aftermarket exists. You have analysts that recommend the stock because, of course, Wall Street banks want further business from these companies, right? If you think, you know, Goldman doesn't want further business from Apple or Nvidia or anything like that, you're crazy. So, of course, that's why you have an analyst department, right? They put out research reports, which are kind of like advertisements, to induce people to buy something which they have in their inventory. That's why it's called a market. A lot of people forget the market part. So what we intend to do with me doing this on YouTube, is opening up the room a little bit so you folks can come and see what we're doing. We always run a 7-day free trial, so you can come into the room, ask questions, get education, that sort of thing. Um, and hopefully we can entertain you a little bit as well while we're waiting for our setup. I always like to keep people distracted until the setup shows up. Keeps them from overtrading. In the old days, if you overtraded, your broker would take you out to lunch. You know, send you gifts. None of that happens anymore. You don't get any of that. So there's no point to overtrading. Guys in the room are very quiet. I love the time change. It screws everybody up. Uh, right now, we're in pure distribution. We're taking the product from 57.28 to 57.40, and we're distributing it up here. The distribution has been successful because the point of control is moved up. It was down here at 34 and change. Now it's moved up to 49. So let's see. London's going to open in a minute and a half here, right? Hey, GL, what's up? How can you tell when not to short? Okay, great question. Okay. When that offer is lifting, GL, you don't want to be shorting. Okay. Also, when the market is doing this sideways, annoying back and forth, right? Now, if you're a larger trader and say you have a thesis, right? Because most people short, they don't really have a thesis. Um, they really don't know why they're shorting. They're just like, it's got to go lower. It's too high, right? That's not a business thesis. It's too high. It's got to crack is not a business plan, right? So when you don't short is when it's slow like this, right? When you don't short is when that offer is lifting, right? See, like right here, let me just zoom in on this. Do you see how the market finds the bottom here? And then the lows of each candle start getting higher. That means the bid is following the offer. That means the buyers are following the sellers higher. That is not a time to short. You always want to short the back end of a move, right? And that's why we like to look above and fail. Okay, here comes London. Oh, they've had their tea. Let's see if we take out those 42 stops. See, there's been bids down here at 42. That's why we stopped selling, right? People think price is defended by buying. That's wrong. Price is defended when the sellers stop selling because they see buyers and they lift the offer like they just did. As you see the offer moving higher, you know there's going to be a seller right here, right? There's been a seller here. The top of the candle are where the size sellers initiate. So they're going to be there. They're going to be there. Why wouldn't you sell at 46 and a half if you were selling there 5 minutes ago? The only reason you'd lift that offer is if you saw buyers. If you don't see enough buyers, you're going to move your offers lower, right? I know I've been a distributor my whole life. There we go. We see some buying. So let's lift the offer and make them chase us, right? The next place sellers are going to be are just at the top of these candles, right? So if you did, for example, go long at 44, you can expect selling at 46 half. You can expect selling at 47 and three quarter, and you can expect competitive selling at 48 half. But the cool thing is now the London session's opened and we've shown where the bid is, right? Remember, always looking for the bid. I need to get some tools to mark up my charts while I'm on these YouTube things. Because Zoom had annotation tools. Because I'm not running Zoom. See how the sellers step in? So you got to manage your expectations when you're in a trade, right? You can't just buy it and hope for 30 points. Hope is not a business strategy, right? So if you were long at 44, right? Like profile traders, they'll go long because N doesn't take the M low, right? So if they did go long, say at 43, 44, and the market gets up to 46, 47, you got to sell into that strength, right? You've got to turn your inventory into cash. Everybody wants to hold trades longer. Now let's see if that M low will hold. Let's look for the bids. We're looking for the bid, right? When London opens, as time goes by and the markets open successively, we want to find the bid. They do, but they're clumsy, Elliot. That's the only problem with the Sierra tools. Sometimes they're a little clumsy. So what I'm finding out now, where the bid is where the buyers are. Who are those buyers? Well, at 4 o'clock in the morning, they're short sellers, right? So they're bid to cover. So if they see size selling at 42, if they see desperation, right, at 42, they'll drop those bids down under 40. And the market will take out these stops that we're watching here. There's one. So what I use this session is to get my awareness of where the inventory is, where the buying and selling is, right? So we take out these lower stops, right? The next one, if we take out 40, we'll be coming down into VWAP, right? Where is VWAP here? Yeah, VWAP's right here. And if we get underneath VWAP and offer underneath it, then you know that those sellers, right? Then you know the sellers are desperate if they have to sell under VWAP, right? And if you are short, you can stay short, right? I'm not trading because we're in the middle of my zone. Thanks, Howard. I'll take a look right after I'm done. As you can see in this market, we have liquidation, right? That's something that we have not been used to for the last couple of months, and especially before Christmas, it was trend up, trend up, trend up. Liquidations were meant to be bought. Now we have inventory above us, right? The concept of inventory is something that is really not talked about a lot in markets, right? When inventory is above you, that means you've got resistance, right? So say you shorted underneath VWAP. As long as the market keeps offering lower, you're okay, right? Now we're coming into the cost basis of the overnight at around 33. That's where 70% of the overnight inventory is priced. 30% or 15% is underneath here, and then the other 15 is at the top. So as you can see, the market slows down when it comes to the bottom of its cost basis. You see that? Because this is just a liquidation. This is not holy crap selling, right? So a general liquidation means that the sellers will outsell the trapped longs and sell the market down to where the bottom of their cost basis is. Then they will lift, right? They will stop selling and the shorts will come in and cover. That's what's going on now, right? So if price stability is achieved here, then we will go take a run at VWAP, right? If we run out of supply under 37, the market will rotate up to 38, 39. That's just business. Very simple. Now, there are trades available here, right? But they are not A plus setup trades, right? So they are quick scalp trades. And if you're not fast, and if you tend to kind of get frozen if things go wrong, well, you don't really want to trade. See, there's VWAP, right? We ran out of supply under 37. What did we do? We went to look for it at 38, 39, 39 quarter. So once I get the lay of the land, once I understand where all the bids are and where the offers are, where the inventory is located, then what I'll do is I'll sit and I'll wait for my setup. Now on a Monday, because I haven't traded since Friday, right? I will tend to only do the look above and fail or the look below and fail. I will not fart around in here because on a Monday, my skill level, I need to like up my game. So to do that, what a lot of traders will do is they'll just start trading and they'll start losing money and then all that psychological BS comes in, right? Why not avoid that and only trade your A plus setup if you're rusty, if you haven't traded for a couple of days? Stick to your A plus setup, spend some time watching, getting to understand what's going on in the market. If you can do that, your success rate will go higher because you'll actually understand what's going on in the business workplace of the day. Does that make sense? Right? It's not all just a bunch of moving averages and everything. There's a business going on. This is a sales chart, right? So like right here, this is like a no trade zone for me because there is no distinct business setup. Some people will short VWAP, like would have shorted VWAP, put the stop above that candle, and then you can just use the levels. I'm not fast enough mentally, and I'll admit that first thing Monday morning to take that trade, right? Later in the day, if I'm caffeinated and stuff like that, I'm on my game, I'm in tune with the market, those are quick scalps you can trade. You take a 38 short against 30, 39 and three quarters, and you put some bids down here underneath 35, right? Clip a few points. Thanks for coming out, right? Speaking of moving averages, how do some market conditions rip to all-time high after a sell-off and sometimes they backfill for further drawdown? It all depends on the order flow, GLMD. Just because we have a moving average or we have an indicator or a zone or all of that stuff is just to tell us what the order flow or business is when we get to those levels, right? So if a market condition rips to an all-time high after the sell-off, it means that the liquidating inventory has been taken into wholesale hands and it's going to be resold into the retail flow for profit. But the order flow has to exist. Order flow is, you know what an order flow is just a fancy word for customers coming in the store, right? They've taken this business and they've made it so complicated. Everybody, oh, it's order flow trading. All trading is order flow trading, idiot, right? Order flow is the flow of customers coming in. They transact against the inventory in the market held by wholesale traders, right? It's a market. Otherwise, we'd call it the stock hot tub, right? So if you don't have the customers to do it, it ain't going to happen, right? Pretty simple, right? If you don't have the buying, right, you're not going to go to all time highs, right? So, and that's what the chart is really telling us. It's just telling us where the large buyers are. Because you know what? When the market finds the large buyers, it'll offer away from them and then try and get people to chase price higher, right? Because that's what you want to do. If you could sell something at $5, why would you sell it at 3? Unless you have to, right? The biggest thing about what I'm trying to get through to you guys, no matter if what kind of a trader you are, is to use some common sense, right? Point of control moves down now, right? So now we took all this stuff that we sold and we're buying it back down here, just like a used car lot. Now we're going to wash the cars, put some armor all on the tires, clean them up, vacuum them, little detail, and go try and sell them above 39. Let's see if any buyers show up, right? First buyers are always the short sellers. Now, how do I know this? Because for 20 years, all I did was trap shorts for a living. So I know that they're the first buyers because they need to cover risk, right? They're cutting risk. They're taking off risk when they're covering a short. So you're always first to the bid, right? Right. So this kind of chop right here, that's not worth trading. If you're a quick, like, 1 minute scalper kind of guy or girl, fine. You can just hop in and out, but you got to sell into strength because all of the inventory is above us now, right? See how quickly the market loses the bid and offers lower and lower? So I'm looking for 28. What I'm looking for now is a look below and fail of 20, 24 and 3/4. That's what I'd really like to see. So now you just patiently wait for your trade, right? There's no reason to just jump in, start trading, right? You just patiently wait for your trade, right? If you're short off of VWAP and you stayed short into that move up to 36, that's great. You can stay short as long as this market keeps offering lower. You can be short. I would expect some responsive buying at 28 and a quarter, 28 and a half. See what happens a lot of the times, and listen, he is without who is without sin cast the first stone. I've done this, right? What I'm talking about is, oh, you guys do this and I've never done. Of course I've done it, right? That's why I'm trying to teach it. Because you miss the short here, right? And you miss it here and then you go short here, then you get stopped out, then you think you go long and then you get stopped out because we are trend down. So that's why a lot of the times I'll sit back and watch until I get what fancy people call situational awareness, right? Is there not much news? I love trading that back and forth balance, right? I what I like is I like for a trend to take us up and then we go sideways or take us down and we go sideways, right? And because that sideways once I get a nice balance going and a nice rotation, say we would do a rotation where we go from 24 to 54 and then back down and back up. I love those rotations, right? Because I know where the borders of my sandbox are. And once those get violated, I'm gone, right? So I'm just checking in with the room. Did everybody have was able to get into the stream? Just checking. Good, good. All right, just checking. I was gonna do a Zoom, um, put a Zoom on top of this if you guys had trouble, but I don't know if Zoom and YouTube can stream at the same time. Looking for 24 and 3/4. Took out those two lower stops. So if I was short at VWAP or I was short down here, this is where I'd put some bids and cover. Okay. So we got one tick. We went to 25, right? We did not actually transact 24 and 3/4. So why did that level work? Well, this is the 4 times discount zone. This is the absolute edge of that 4 times discount zone. So say you front ran 24 and 3/4 and you're long at 25. Because there's a standard deviation there at 29.84, you should expect some selling, right? YouTube does have a little bit of a delay, Travis, from what I hear, right? So kind of expect that. Besides, people don't follow me into trades. We usually call out trades. Now, I haven't gone long here, but if I were, I would like the market to go under 24 and 3/4, go down a little bit, and then come back up over 24 and 3/4. So I know that the seller are gone. What I'm going to do now is I'm looking for the seller, right? Right now, I know there's a seller at 28/4. Let's make these candles a little bigger so we can zero in on this, right? If we offer over 28.25 and print the half 3/4, then I know that the seller sees buyer. See how it printed half? There is a lag. There is a lag doing this on YouTube versus Zoom. But then again, we're not the kind of trading room where you guys follow me into trades, right? If we offer over 29, expect a seller right here at that standard deviation because that's where execution programs will execute. If it rips right through that standard deviation, it means that bids are present and the offer will lift. The offer is the red line. If the offer lifts and we keep printing, that means buyers are there. If the offer looks above and comes underneath, it means they have to put it on sale because they've run out of buyers, right? Oh, cool, Phil. Way to keep it positive. Appreciate that. So the seller is still there, right? At 30, where we expected. So if you were long 25, 26, 27, you'd give them a little love at 30, right? Hit out a few, right? Always sell into this strength, right? Always sell into strength. That's how you keep consistently making money, right? You can hold trades longer. That's great. Nothing wrong with that. But what's wrong with 3 to 4 points on 5 minis? That's not a bad trade once you know what you're doing, right? Practice on the micro. So this was not a look below and fail. This was a fail to look below. So had I had I didn't want to take the trade until it did a look below 24 3/4. That kept me out of the trade. So now what I have to do, if I miss a trade, I don't get mad. What I do is now I adjust my execution, right? So I know that I'm not, JJ, you better have another cup of coffee, right? Maybe get on the treadmill, get some like oxygen to the brain because you're moving a little slow. That was a good trade. I should have been long 26, right? Should have been long 26 against that 25 and then selling into the 28, 29, 30s, right? So now I know that I'm not really as sharp as I should be. So I need to up my game, right? So when you make mistakes, when you miss trades, use that to improve your trading. Don't get mad, get smart, right? Don't get tilted, get smart. Don't think about revenge, use it to improve, right? You're going to be wrong all the time. You're going to miss trades all the time. Guess what? Welcome to business, right? That's business. You're not going to make every, you know, it's only on YouTube that you start trading, buy a Lamborghini, and then retire to Bali with a supermodel. That only happens on YouTube. That doesn't happen in real life that much, right? That's not the norm. So now we're going to backfill. We went up off the 25s to create, that created demand, right? Because supply shut off. And now we're going back to fill in that demand with supply. I'm on YouTube now. Yes, I know. But I'm old. So there will be no Ferraris and supermodels for me because I don't think, Raj, you and I could even fit in one of those damn things now. You see that video about that old guy trying to get in out of a Lamborghini? It is hilarious. He's crawling on the ground. Not exactly elegant. Not exactly elegant. I was even looking at a Morgan Plus 4, and I'm like, yeah, it's a little tight. Maybe an old Bentley is more up my alley. Found some bids at 28. Let's see if we can rotate up to 32 1/4. So the whole thing is, folks, now we're back in this discount zone. When the next period opens in 5 minutes, that's why I always have a counter here too to help me manage my expectations. I know the next period's opening in 5 minutes. What do I expect? I expect us to go sideways here for a little bit and then back up, right? Unless sellers get desperate and have to sell under 24. But right now we know the bid's under 24, right? There are buyers there. That's why the sellers stop selling, right? So if you're a seller and you find big buyers, right? That's what we used to do in the old days. We would short a market down to where we found the big buyer, and then we know where the buyers is. We flip to we'd cover, go long, and then sell into it, right? That's how people used to trade in the old days when we used to ride horses to work. So the levels are working nicely. 24 and three quarters held, right? We do these levels, every night. And this way we can manage our expectations. So if you were short off VWAP at 38 and we got down to 26, 25, pay yourself. It's a beautiful payday, right? I just trust the levels, Travis. What I trust is the order flow at the level. Now, I didn't know whether 24 and three quarter would work. I was looking for a look below and fail to make sure it was tested. But it outsmarted me because it didn't even look below 24. The selling stopped right at 25 to the tick, right? So that tells me that there are bids under 24 and three quarters because the offer walked away from the bid. Get it? That's like you go to one of those highfalutin car dealerships and there's like one, in the old days, remember the Viper, right? There'd be one and then people would like bid up for the car because there was only one in the dealership, right? I'll give you 90 grand. I'll give you 110, right? All the big shooters would come out, right? I know this because my boss actually just walked into a dealership and bought a Viper one day. Came back to the office after lunch with a Viper. I was like, "What the hell did you do?" He's like, "I was in there, and you know, the guy was making like 300-400 grand a day." So, anywho, so now we're just gonna. Well, what do we need to do? We were selling above VWAP, above 39 all night. Now we got to come back and buy all that crap back, and then let's see what the next. And we'd like to take it and sell it back above 39.40. But do we have the order flow? Do we have the customers? Right? Always ask yourself, do we have the order flow to do it? Right? So, hey, Walter on YouTube, yeah, um, this will be up. The recording will be up after the live stream. So, what you do, Walter, is you go and you just find lows and highs. And when the market comes back to those lows, you see two-sided trading. And two-sided trading, the reason why I use these rectangles is in the old Jim Dalton mentioned it once, but he never really talked about it a lot. And I grabbed it. It was the simplest thing. Find a balance zone, double it to the upside and downside, and you've got targets. And it's all about inventory. Remember, markets are about inventory and order flow. Order flow are just customer flow into the shop, right? That's all order flow means, right? So anyone tries to sell you anything fancy about order flow is just customers. If you don't have customers, you don't have a market, right? Otherwise, you're stuck with a bunch of inventory, right? Remember, we're all about moving product, right? Markets exist to move product. There are some people in a building right now sitting and going, what product can we financially engineer that people will buy, right? So investment banking is the creation of the product. Sales is when they go and sell the product. Traders are the guys who drive the truck with the product to you. And that's all Wall Street is, right? It's just a factory, right? It's this massive machine that creates product and sells it to you. Yeah, the thing is, Walter, the mystery of the triangles is really not that much mystery. Anyway, that's it for me. Hopefully, this worked and we didn't upset too many people in our trading room. I think as soon as I am done with the stream, It'll be available on YouTube. Thanks everyone for watching. The rest of you folks, we will see you in RTH. Folks on YouTube, come by and visit us at microfutures.com. We'll teach you how to do business properly, right? So you can make a living where you don't keep blowing up accounts, right? We'll teach you how to do business properly. Common sense, right? Common sense, simple trading. If it's, if somebody can't explain this market to you like you're a 4-year-old, if they can't explain it in a simple manner, it really means they're just shooting darts at a board, right? Markets have been going on for thousands of years. Automation just makes them more efficient, right? But the market never changes, right? Make the donuts, sell the donuts. That's it. Thanks, everyone. We will see you in RTH. Bye for now.